Welcome back. You're watching The Money Show with me, Kavita Thapliyal, and there are plethora of funds available in the market to invest your hard-earned money. But how do you assess which is the right fund for your portfolio? What are the criteria that one should look at to help you navigate through this maze? We have on board Gautam Kalia, Senior Vice President and Head Super Investor at Sharekhan by BNP Paribas. Also, do not forget to send us your portfolio queries on our WhatsApp number, which is 865-797-4571. You can also email us your queries on themoneyshow@etnow.tv. Hi, good evening, Gautam. Welcome to the show. And we have our first viewer's question for you. Okay, so we have our Arunachalam from Coimbatore who wants to ask you a question, and he seems to be having loss in his Axis Blue Chip Fund. I think I have Mr. Arunachalam online also on the phone line with me. Good evening, sir. How are you doing?
Yes, there's only one question whether I have to hold this Axis Blue Chip or exit. It is giving loss for the past 1 year.
Got it, sir. So, do you have any other blue chip in your portfolio, or that's the only fund?
Other I have Quant Mutual Fund, SBI Small Cap, and ICICI Equity and Debt Fund, Balance Advantage Fund.
All right. Gautam, let's understand the non-performance, because Axis Blue Chip has been on radar for a lot of investors where they are not happy with the performance of this fund. I mean, yes, the large cap story is not very upbeat right now, but even before this trajectory began with the large cap underperformance, this fund in particular has been in concern.
Right, Kavita. So, yes, a lot of clients were looking at this fund because this fund was doing extremely well about a year back. And a lot of allocation did come into this fund across clients because of the performance. And then obviously we are aware that there was front running through at the fund house, but that obviously is not really directly linked to the performance of this fund. It's just that most funds when you invest in, you should give it some time, especially if it's in your portfolio to deliver return. But you should wait for, let's say, your distributor advisor to kind of give you that call when they kind of give up on the fund and they suggest better options. And in such a competitive market, there are unfortunately always better options, fortunately or unfortunately. So our research is suggesting that we move the allocation from Axis Blue Chip Fund to ICICI Prudential Blue Chip Fund. That is relatively more higher confident bet from our research side for allocation to the space.
All right. Is there any other question that you want to ask, Mr. Arunachalam?
Yeah, thanks. It's only question I will hold till the market ranges. Okay, market is rising and I want to exit, not want to continue with this. Okay.
Thank you so much for sending us your query. We move on, and Krishna Atheja's portfolio. Gautam, he has invested in Canara Robeco's equity tax saver. He has Quant Small Cap. He has Nippon S&P Index Fund on him. And lump sum investment, he also has Axis Blue Chip, and lump sum investment is in Axis Growth Opportunity. He wants to understand if he can continue with the Axis funds. Clearly, the trigger is the AMC's underperformance and the various funds underperformance. Time horizon for this particular investment is 20 years. And if you suggest him to move out from a fund, he wants to understand where can he invest it and what should be the reinvestment strategy.
Right. So he's already got a SIP of 11,000 rupees per month, and a plan of for 20 years. Nippon S&P Index Fund, Quant Small Cap Fund, and Canara Robeco Equity Tax Saver. So he should continue those SIPs. He's made that lump sum investment in Axis Growth Opportunities Fund. So we're coming back to the question of Axis. Really, when you look at fund houses, and especially someone like me, I've interacted with fund houses over the last 20 years. Each fund house or each fund manager, they have a particular style approach. They have a methodology for selecting stocks, and that methodology, when they select the stock, post that it's not just about you; it's about the market aligning to your interest and moving with your interest. So that is something no one can control. So really, earlier when Axis was picking stocks, the market was also aligned to their stock picks and was moving in that direction, and that's why the returns were fantastic. Now the returns are slightly on the lower side, and that's why these questions are coming up. Again, my suggestion there would be that you can review and shift your existing allocation from Axis Growth to the large and mid cap scheme of Kotak, the Kotak Equity Opportunities Fund. So that is the only change that I can suggest, that Krishna can make.
One strategy I wanted to understand that a lot of investors have actually adopted, Gautam, which is having an SIP in one fund and doing lump sum investment also in that particular fund. How does it change your average buying cost and returns over the period?
Right. So if you're just doing an SIP, then it's fairly simple. But when you're adding lump sum, then what ends up happening is it's like a weighted SIP, and usually the lump sum amount is significantly larger than the SIP. And investors do that when they are fairly confident of a particular scheme. It's okay to do that because you don't want to end up with these schemes that just the right way to manage when you have multiple schemes. So I think if you believe in certain funds, you believe in a fund manager philosophy, you're getting that recommendation also from people you trust, then you should continue that way. Obviously, what ends up happening is that it becomes like a weighted allocation every time you make that lump sum investment because you're buying units at a so it's not pure SIP. So it should be viewed also like that with the knowledge when you're looking at its performance.
Got it. Gautam, we'll move on to our next viewer, which is Jayesh, and he wants to understand which is a better fund, SBI Small Cap or Nippon India Small Cap. We don't have him on the phone line, so we really don't know what's the current status or how diversified he is across market caps. But then talking about selecting a small cap, one really needs to know that you have to be invested for a longer period of time, which could be 5, 7 and plus years. And talking about performance, I want you to first tell us the performance of both of these funds and how can one align their goals and which fund is better as per the fund manager strategy.
Sorry, I don't have the performance readily available with me, but let me just give you the thought process. SBI Midcap is what our research is recommending, and I'll just explain the thought process that goes behind selecting one fund over another. So there's a qualitative set of parameters and a quantitative set of parameters. Quantitative obviously looks at past performance, and it's not just point to point; it's on a return basis, and they also look at things like the amount of risk taken to achieve that return. So some funds can take extremely high risk and deliver high return, but it's also about managing that risk, especially when the market corrects, then that risk comes to fruition and your returns become more negative. So that's what we call a drawdown. So the quantitative parameters are mostly focused on return and the risk, and the qualitative parameters actually can extend, and you can go up to 30, 40, 50 parameters there. But really, it's more about corporate governance, the investment process, whether you're relying on one individual or a whole host of individuals. Is there a support team, a qualitative analysis team? Who's looking at the risk management? Is there someone outside the fund management team also tracking the risk management? So a combination of these factors will help you arrive at schemes that are more likely to give better outcomes. Not the best return, but at least the better than average risk-adjusted return. So that's really the gamut through which most research teams select schemes and then make a choice between one over the other.
We move on to our next viewer, Vivek's question, and he wants to invest for 20 years. Right now, he's doing SIP of 40,000 monthly. Kotak Small Cap, PGI Mid Cap, Parag Parikh Flexi Cap. He has PGI Flexi Cap, Navi Nifty 50 Index, Navi Nifty Next 50, and Navi US Total Stock also. And he started investing in June 21. So, all right. How would you like to filter out his portfolio?
Yes, so he's got a SIP of 40,000 rupees per month. but the allocation to mid and small is roughly 50%, which is quite high. And that's why the suggestion is to kind of reduce that allocation there. So the 10,000 rupees per month that is going into PGI and mid cap, maybe reduce that to 5,000 and move that 5,000 to a large cap scheme like ICICI Prudential Blue Chip Fund. So that way you are kind of rebalancing the allocation within equity space more defensively. And I think that nothing else, no other change required. I think in terms of the index funds that he has, otherwise Parag, Parekh, PGM Flexi, yeah, everything else seems to be all right.
One thing I wanted to understand now, as compared to all the AMCs mentioned in this particular question, Navi is comparatively new. How can investors actually check the status of an AMC, which is as new as Navi, and a lot of them coming ahead also? How would you decide? Because that trust factor is important. You know, if you're already investing with an established brand, you know there is a safety comfort over there. But then talking about these new AMCs, what all do you need to see before picking up a fund from there?
Right. So, they're very, very important, and actually, it's a very tough question to answer. But really, whenever there are new AMCs, you have to do a AMC level due diligence, and that's what research teams do when it comes to asset management companies. And while I don't want to get into the details here of the depth required for AMC level due diligence, what an investor can do really is understand the regulatory framework within which AMCs operate and know that the regulatory framework is robust enough that their money is protected and their money is safe, right? Because that is the first consideration. Obviously, second is that it will not be managed well, but the first is that it is, the money is safe, and then we come to the second part, which is whether it's managed well. And if there are specific fund managers or you're betting on some active fund management, then obviously you need to look at the scheme performance and the fund manager history and investment process that are put in place. Otherwise, in this case that Vivek has invested, really the investments are in index funds and passive funds. So in passive funds, the risk of mismanagement is only to the extent of the fund not tracking the benchmark very closely. And if a fund is not tracking the benchmark very closely, it's probably one because the cost is slightly high, or the operational structure of the fund is such that it's not being able to rebalance the portfolio as frequently as the index is rebalancing itself. So if it's operational, then it can go either way. You can have one deviation from the index through a passive fund, and that deviation may work in your favor. But if it's on cost basis, then that is something to be considered seriously and maybe look at a cheaper index fund.
We move on to our next viewer's question. Naresh, he wants to know how to invest in a large cap, mid cap, multi cap, and flexi cap funds for long term.
Right. Again, this advice I give to most investors who come with a question like this, that please think of long term as a minimum 5-year investment horizon. And when I say 5-year, it is the investment horizon is in the asset class, which is equity, and not the schemes themselves. You should keep reviewing your investments in the specific schemes and seeing if there are better options available. But you should stay committed and invested in the asset class. So for Naresh, we created a portfolio. One is the ICICI Prudential Blue Chip Fund in the large cap category, the Mirae Asset Mid Cap Fund for mid cap exposure, the Nippon India Multi Cap Fund for multi cap exposure, and the HDFC Flexi Cap Fund for flexi cap exposure. So depending on your preference, maybe you can do a 25% allocation to each of these funds to start off with. It obviously depends on your risk profile and other parameters, but if it's a 5-year plus horizon, then you're pretty okay going in a portfolio like this.
Gautam, now since Naresh wants a suggestion on large cap, mid cap, multi cap, and small cap, you get a complete exposure if you just pick up a category like a multi cap and a flexi cap. despite of having these categories in portfolio, do you need a concentrated large cap and a mid cap or small cap, or you think that exposure from multi cap and small cap across market caps categories is more than enough?
I think it's more than enough. It's not specifically required. It just what happens is the journey of the client becomes so performance attribution becomes a little bit tricky. So when you have a mid cap or a flexi cap, then trying to figure out whether the fund has done well or not and why, that becomes a little bit tougher in a multi-cap flexi cap. So when you have dedicated allocation to, let's say, a large, mid and small, then it kind of becomes easier because the benchmarks are clearer, performance comparisons become much simpler to understand and track. But besides that, which is, I would say, a more operational reason and which is a more ongoing reason, I think it's just more convenient if you go in for a flexi cap because you're leaving that decision up to the fund manager. You're anyway leaving all decisions to the fund manager, except for the key ones, which is how much money you want to allocate and for how long, which are the most important decisions that the investor takes. So if you're anyway leaving the stock selection, what price you're buying at, what price you're selling at, you can also leave this decision on how much allocation you're making to large, mid and small.
All right, I think that will be all for today, Gautam. Thank you so much for making time and helping our viewers with their financial portfolio. And before I sign off, I'm going to leave you with our WhatsApp number and email ID where you can reach out, you can send us your portfolio related queries, and we will get it sorted by our experts live on the channel. Thank you so much for watching. Goodbye.